Welcome back, FUD Nation. Now, I received a ton of feedback on my last video asking for more investigations into nefarious activity in the crypto space. So today, we're going to do just that. But before we dive into market manipulation, I want to reflect on one fact. This is not unique to crypto. Market manipulation exists in almost every market in the world. I'll play here a clip of my interview from earlier this week where Crown, who's a very experienced trader, explains how he's seen a ton of manipulation in his day in traditional markets.
Manipulation to most people just means that that someone with more money than them is putting their will into the market, and they don't like the direction that that's going. People weren't talking about manipulation when Bitcoin was going to 20,000, just like people weren't talking about manipulation when gold went to whatever crazy number it went to as well. That just is the nature of markets. Manipulation is whenever you're putting in an order, essentially, by definition, whenever you put in a buy or a sell, you are manipulating it. You might not be a whale compared to someone who has a bigger account than you, but you might be to someone who has a smaller account than you. So people don't really consider these sorts of things. And at the end of the day, is it manipulated? Yeah, sure it is. All markets are, man. I've seen some crazy things on the floor, on the actual floor of a regulated exchange, man. So you bet magic internet money as all kinds of manipulation.
Manipulation can range from influence over the news to insider trading, order spoofing, and more. Today we're going to be talking about a very specific type of manipulation, something that's possibly more rampant in the cryptocurrency markets than any other. And unfortunately, because of this type of manipulation, it almost completely obscures the actual liquidity and volume in the cryptocurrency markets. Today, we're going to be talking about wash trading. Now, some of you may have heard about wash trading before, but suffice it to say, it's an epidemic here in crypto. If you don't know what wash trading is, it's essentially someone who buys and sells their own orders. So an example of me wash trading would be if I go onto an exchange with 10 Bitcoin, offer to sell my 10 Bitcoin at a certain price, and then also buy that Bitcoin at that price. Originally, wash trading was used en masse by brokers who wanted to inflate the amount of trades they were actually doing and thus taking more money off the table. But in crypto, it's got a very different purpose. Most people find out about exchanges by the amount of volume they have on the exchange. In fact, the volume that exchanges report is summed, and then that's used to create the overall volume for the cryptocurrencies that are in the top 100, top 1000 as you scroll down CoinMarketCap. So when you hear people saying that Bitcoin has a volume of X, it's really just a sum of all the exchange volumes that are being reported. In fact, some prominent members of our community have even used volume as a means by which to determine an overall asset value for Bitcoin. Just we'll look at Anthony Pompliano on CNN doing exactly that all of a couple weeks ago.
You know, the 24-hour transaction volume on the Bitcoin network is about $4.6 billion as of lately, and the market cap's $74 billion. So that's about a 16 times multiple of transaction volume for market cap. That's very similar to MasterCard, which does about $11 billion worth of transactions. It's valued at about $180 billion. So from a value perspective, it's right there on par with MasterCard.
Volume is one of our biggest tools to assess these crypto assets, and when you do wash trading, you essentially fake that volume and obscure that value. Let's take the instance of Bitfinex last year, who had a token called BFX that they urged their token holders to convert into equity in the Bitfinex exchange. In order to calculate the actual value of the Bitfinex exchange, they were using a multiple of their daily volume. And that's because projected earnings are based on fees, which are based on daily volume. At the time, it didn't even require a second account to do wash trades on Bitfinex. So while they were raising money from investors at a valuation that was based on volume, they had the complete ability to inflate that volume. This caused a lot of investors to FOMO in and try to get their cut of what looked to be the world's leading Bitcoin exchange. And Bitfinex was certainly not the only one. OKCoin, now known as OKX, was notorious for faking volume. There have been several accusations of faking volume on OKCoin, stretching back to 2013, when CoinDesk first released an expose report accusing them of precisely that. A few years later, the CTO left under duress, claiming that OKCoin was financially misleading and that in his time serving as the CTO, he had never seen a single financial statement and that they regularly employed procedures to fake volume with bot-driven wash trading. Want to know who their CTO was? That's right, you guessed it, CEO of the world's current largest exchange by volume, Binance. In March of this year, a new investigation of OKX found that 93% or more of their volume had been fabricated. The March investigation, which I'll link below this video, used a test of essentially seeing how far $50,000 of market buys or sells could move the market in purportedly highly liquid markets. What they found was quite shocking. In highly liquid markets of tens of millions of dollars of daily volume, $50,000 should be a drop in the bucket. The results showed that OKCoin had between 90 and 99% in fake volume. And when you look at the volume on their market graph, it's almost comically obvious that this isn't humans. I mean, it's a perfect sine wave. What kind of human market interacts that way day over day? It's just not possible. I mean, look at a chart from an actual genuine market. They're incomparable. Recently, CZ of Binance conducted an interview where he explained that it's tricky to identify wash trading behavior. CZ explained, let's say Bitcoin is $6,300 on my exchange. Some guy wants to buy it all the way up on Binance to about $7,000. The guy has a lot of money and wants to buy. So is that manipulation or not? So it's really hard to tell at what stage does that become manipulation. Is it a warning? Is it a price percentage difference from other exchanges? So conceptually, yes. If Bitcoin is $6,300 on other exchanges and it's trading at $7,000 on my exchange, then most likely there is some type of manipulation. But how do you define that? How do you prevent that? CZ essentially here explains that market manipulation via wash trading is not something that's been stamped out by Binance, and that in theory, you could argue that even wash trading isn't manipulation. It's very simple. If someone is buying and selling their own orders, it's wash trading. It's not real volume, and it can be identified. In August of this year, there was a landmark investigation of fake Bitcoin and cryptocurrency trading volume by the Blockchain Transparency Institute. According to this report, $6 billion out of the $9 billion of daily cryptocurrency trading volume had been faked, and more than 70% of the top 100 coins had engaged in wash trading to the tune of at least 300% of their actual value. Obviously, to quote CZ, it may be tricky to identify this behavior, but we know it exists. And the only question now is, how much of it is going on? So now that you understand the scope and the nature of wash trading, let's get down to the nitty-gritty. How does this actually affect the cryptocurrency markets?
Oh, Elio trades. It's a free, unregulated market. If there's no regulation against it, then someone should be able to wash trade, right? Oh, Elio trades. If they're paying the fees to the platform, then they should be able to wash trade. It's not hurting anyone. They're paying the fees. They're losing out. What does it help them? Right?
For starters, as we explained, exchanges have a tremendous incentive to wash trade. It makes it look like they're a much more liquid market than they are, and it gives the perception that there are buyers and sellers in the market when there might not be. That's misleading and can get retail or smaller investors absolutely crushed. Second, market makers who either work for exchanges or work for cryptocurrencies themselves can slowly walk up the price of their own crypto by wash trading it at the top of the order book. This is what I can only describe as an obvious practice. I mean, look at coins that shot up in anticipation of noteworthy news. You could say that this was just the retail market FOMOing over the news, but more than likely, some of these rises have been way too suspicious to blame on just a few retail investors FOMOing in. But hold on. Elio trades. Is there any good use of wash trading that actually benefits retail investors? Actually, you could make the argument that wash trading can, in some circumstances, provide some liquidity to a market where there aren't many buyers and sellers. There's also pegged assets like USD Tether. And you might not like Tether, but for better or for worse, there are billions of dollars in the crypto market's liquidity housed in Tether. So it maintaining its dollar peg is kind of necessary for it to survive and maintain consumer faith. There have been many accusations that Tether is being wash traded on Bitfinex, and Bitfinex is pretty much owned by the same people who created Tether, but that's for another video. The point is the wash trading of USD Tether actually contributes to more stability in the Tether price, more faith in this stable asset, and maybe that's a good thing. I just wanted to interject this one thought as a potential benefit of wash trading. I know that they're kind of hard to come up with, but I thought I'd try to be as fair as possible and interject at least some potential pragmatic value for this kind of behavior. So what should you do with this information? Well, first of all, you should stop going to exchanges that fake their volume. I'll put some links to these investigations that I used for this video in the comments section below. According to this research, the best exchanges are Coinbase, Bithumb, and Binance. Beyond supporting the more honest exchanges, what's important is that we demand more transparency. There are ways to drastically curtail wash trading and present a far more transparent and accurate version of the volume in our markets. This video is not meant to put you off of cryptocurrency. Remember, market manipulation is everywhere, but this particular type of manipulation is far too rampant in cryptocurrency, and we need to band together as a community and demand better. If you guys enjoyed this video, I'd really appreciate it if you left me a comment in the comment section below. Of course, smash up those likes, and if you're not already subscribed to FUD TV, I encourage you to hit that sub button. As usual, I'm Elio Trades, you're watching FUD TV, and I'll see you very soon on the next episode.